chartbusters. As promised, let's get you the management of CMS Info Systems. The stock has rallied over 40% this year. DAM Capital recently also wrote a bullish note on the stock with a target price of 650. Let's tell you, what the plan of the business is going ahead. And the best person for doing that is Rajiv Kaul, the Executive Vice Chair, Whole-Time Director and CEO of the company, joining in. Rajiv, always a pleasure speaking with you. The last time we spoke, you said that it was a T20 innings. Let's talk about T20 and for the long-haul test as well. For this year itself, you had said that, the target of 2,700 crores on the top line, you're looking at reaching the upper end. We're in the middle of this year so far. Do you think there is a chance that you surpass that upper end as well? If yes, then by how much? If not, then, is the upper end intact? That's point number one. And on the second point itself, for both your verticals, which is managed services and cash logistics, if you could give us a sense of the growth path ahead.
Mangalam, good morning. I was wondering which game you're going to play today. Is it going to be tennis or pickleball? But let me stick to the baseline right now. I don't want to come to the net so quickly in the year. We've had a very robust last year. As I told you, we had 1,900 crores of order wins, which was 2x the wins we had in the prior year in our managed service and technology business. We have given a guidance of doubling our revenue for this year on a base of FY21. And as of now, we are, as a team, totally focused on achieving that guidance to make sure that we can be in the 2,600 crores out of revenue range, 2,700. Very early to talk about can we surpass that. Your Q1 has been a little bit slower seasonally as an industry for everyone because of the elongated election cycle. Let's see how H2 works out. But we are reasonably confident of hitting our 2x growth from FY21 to 25. So I think that's the only guidance we'd like to stick to right now and hope we can deliver that.
Okay, 26 to 2,700 crores. Hi, Rajiv. Good morning and thanks a lot for joining in on the show. I wanted to understand this first of its kind deal win for y'all. The AIoT remote monitoring solution. Yeah, that's the first of its kind. And AIoT is something that y'all have been looking at as well. Tell us more about this. Is there more order wins in the pipeline? What's the current order book at? As you said, last year was great. This year, how are things shaping up?
Well, happy birthday, Nigel. Hope you're having a lovely birthday. Our AIoT business, is our newest and youngest business. We incubated this in FY21. We have already hit an annual revenue run rate of 100 crores. And from an outlook perspective, we have seemed fairly confident that we can double this business in the coming 3 years. So we feel in addition to our retail cash logistics business, our AIoT business should lead our growth in the coming years. The new order win, which we had in Q1 of this year, is one of its kind because we are a sort of a newer entrant. We have come with a very different machine learning AI stack to help banks upgrade their remote monitoring and their branch and ATM surveillance systems. This one is unique in the fact that a bank has entrusted us to build and operate an entire end-to-end platform, which will encompass the command center on-prem to the branches and even the ATMs. So it's sort of an interesting use case. We think this would become a significant platform to build for us where we're investing money in building this technology and could become a reference case for other banks to emulate over the coming years.
So if you could give us a sense of the TAM that you are, looking at out here, because it is a one-of-its-kind product, end-to-end solutions, etc. What are the typical realizations on a business like this? What does it open up for in terms of cross-selling and upselling opportunities?
So, okay, Mangalam, you always go deep into a quick interview, but let me try and answer this in a manner which we can disclose things at the same time, don't share too much comparatively. From our perspective, there are 250,000 ATMs in the country. There are 120,000 branches, and I'm only talking still BFSI sector. I'm not talking about the sectors like retail where we are focused on. We feel almost 25 to 30% of this base has been covered with new technology upgrades from a surveillance system perspective. The remaining 70% is still not covered. Those contracts and deployments should happen in the coming 3 to 4 years, in which we hope to maintain our lead. We are currently the #1 player in BFSI for this segment, and we want to make sure we remain and retain our leadership position there. From a cross-sell perspective, I think, first of all, we entered the segment focusing primarily on the ATM segment. From there, we are able to build a stack to cover bank branches. And then from there to go on, the command centers of the banks on the on-prem itself, we are able to cover that. as you penetrate these sectors, you're able to develop different use cases each bank may need from a software perspective, which is sort of a one-time investment. And then you can sort of take that investment and deploy the product, the software product for other banks who may feel a need to deploy that. From a broader perspective, there is an opportunity. Again, I think this is in the midterm, not short term, for us to be able to take this learning and apply to the broader retail sector. Now, retail could be, like I was listening to your interviews earlier, jewelry stores, right? Again, the sort of technology being deployed there is, let's assume X. I think there's an opportunity to make it really significantly upgrade the technology out there from both a surveillance, monitoring, and analytics perspective. So these are sectors we will focus on and keep building out over the coming 4 to 5 years. And that's where, our confidence in terms of saying that we think we can double this business in the next 3 years, make this contribute 8 to 10% of our overall revenue comes from.
Okay, all right. Rajiv, you've given us a top line number, 26 to around 2,700 crores. What about margin outlook? Should it be in the mid-20s? And also the ROC, typically, I think you've done mid-20s odd. So give us a guideline on both those two.
No, I think as a service and solutions firm, I do think it's important for investors to keep thinking ROCs. Our margins are world class. We're at the 27, 28 sort of percent EBITDA margins. We don't give margin guidance, as you know, Nigel. But from our, if I can only talk historically, over the last 15 years of creating this company till now, our revenue has grown at a CAGR of 17%. Our EBITDA margins and PAT has grown at a CAGR of 20% plus. However, ROC is, I think, the right metric. Our ROC last year was 27% plus. But if you think of it from the last 3-4 year average, we've been 25% plus. For us as a team, where we stand today, driving revenue growth and market share wins is very critical while we maintain a good margin profile. And therefore, achieving and maintaining a 25% plus ROC is very important to us.
Got it. What about inorganic growth? You're focusing on organic, it seems, as of now, but there are plenty of opportunities out there. Is there something in the anvil?
Well, when you think of these bullish stock markets, M&A takes a back seat. It's not easy to do M&A when everybody is going and listing the company. But from our perspective, we are 2 sectors where we have been incubating organically right now. And if we are able to find any new opportunity for M&A, we will definitely look at it, which is one is around bullion logistics, which we have talked about. And the second is around creating a whole tech and field stack on debt collection solutions. We think there's a very important sector which is emerging in India, and we would like to invest into creating a solution stack there. In addition to this, I think fintech is an area we keep analyzing and examining if there's an adjacency which makes sense for us to be in.
Take that point. Just when is your analyst meet? The next one?
I think we do every quarter. The analyst meet. The next.
No, the analyst day that you spell out your.
So we did one last year, and I think we did a fairly extensive sort of event at the end of fiscal year this year. I think we would look to do this at the end of FY25.
All right, because the reason why we ask you this is that when you say things there, until you say it there, you don't say it to us here as well, no matter what questions we ask you. So we'll look forward to a detailed discussion at another point in the future. Thank you. Always a pleasure speaking with you.